Good morning. This is Tom Alexander. It is Monday, February 17th. Happy Monday. This is the weekly update that I do. This is the weekend update because this is a long weekend for this week, beginning today. Actually, trading began last night in Globex. Not much happened. It will continue tonight in Globex. The regular sessions will begin, and then we'll have regular cash trading for the rest of the week. So this is the update. Well, we are trading at very, very close to all-time highs in the NDX, the SPX. We have divergences all over the place. We're at that proverbial position in the market where something has to give. I have been thinking that for quite a while. We have been in extremely mature structures from an auction market perspective. If you want to see what I have been saying up to this point about this market on a week-to-week basis, you can go to, let me show you, go to alexandertrading.com, click on weekly update, and what you will see there, what you will have available, you will have today's report available. You'll also have a PDF you can download. You'll have a link to the video. You can also go back years and see what I said each weekend for the previous several years about the market. You can see how it progressed. You can judge for yourself whether or not I know what I'm talking about, and if this is a methodology you would like to learn more about. So let's talk about today's market, okay? By the way, if you find value in this, please like and subscribe. You know the drill. It's very helpful for the algorithm if you like and subscribe. You don't get put on any list by subscribing, nothing. It only helps me. Okay. All right, let's start with, I'll come back to this chart. I want to start with the indices. Now, it's pretty simple this week, guys. The SPX, the NDX, here's the NDX. I'm going to pull it up here so we see it next to the SPX. And you can see the SPX, the NDX are just right at all-time highs. And then contrasting that, you can see the Dow is below its all-time high. The Russell is well below its all-time high. Now, these two structures are actually very, very different because you have the SPX and the NDX potentially in vertical development to the upside. You have them potentially in a trend. We had the huge ramp on Thursday, then we had a digestion day on Friday. Now, if this is initiative development out of a mature multi-month balance area that I think it is, and again, you can go back to last weekend's report and you can see what I'm talking about there, then this thing should continue immediately. Well, if that's going to happen, you're going to have the Dow and the Russell also break out of their respective balance areas. They are also in balance areas at this time. So this is a little bit of an unusual situation where you have the four major indices are divided into halves. You have the SPX and NDX and potentially a trend to the upside, and then you have the Russell and the Dow in a balance area or consolidation, going net nowhere, but increasingly likely to begin to trend one way or the other. All of this adds up to there's likely to be a trend. You're likely to have the trend continue higher in the SPX and NDX and be joined by the Dow and the Russell, or we could be on the cusp of a severe false breakout type of trade and the SPX and NDX crater. And if this is a false breakout trade, you will see last week's lows taken out in short order. It's not a prediction. That's just how an auction market develops. So we're at a point now where everything is pointing to a sharp move here. You have the Dow and the Russell coiled up in very mature balance areas, very mature consolidations. And then you have the SPX and NDX apparently appearing to break out of multi-time frame balance areas slash consolidations on Thursday, with Friday being somewhat of a digestion day. Actually, the NDX was up. But these moves, if this market is indeed, if these two markets, the SPX NDX, are indeed in initiative moves higher, you should begin to see immediate acceleration. And if that's the case, you're going to see the Dow and the Russell participate to one degree or another. Okay, let's take a look at the page I began on. Here are the internals. Now, I use very simple things. I don't use indicators, magic numbers, et cetera, et cetera. What you see here, the red line is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of advancing issues. The histogram is breadth. You can see breadth has not shown any consistency for over a month as we've chopped and churned around in this area. Now, I can make a bullish case here or a bearish case here. It's a chicken or egg thing here. If this market is going to continue to trend higher, you're going to see an expansion in breadth. You're going to see the 10-day, the 5-day moving average move up towards upper extremes. On the other hand, if we stop in here, then what you have is yet another divergence, and it's forecasting a very, very sharp move through this structure to the downside next week. So I think that next week we're going to have, I would suspect we're going to have a wide range week, one way or the other. Which way it goes at the moment, I'd have to give the benefit of the doubt to the upside. Just I'm sitting here at 9 o'clock, 9 a.m. Eastern time in the U.S. Globex is friendly to the upside at the moment, so we shall see. You guys enjoy the rest of your day. Thank you. I will be in touch with you again very soon.